those of you that have young kids, I don't know if, I cannot tell my kids to do anything. They have to want to do it. Once they want to do it, boy, they're completely and totally involved in it. But it's all about getting the participation. So, there's a few more of the concepts, and I think everybody had a handout, right? So you can go through some of those in terms of values, the sense of, belonging, desire to make meaningful contributions as opposed to, bettering necessarily their lives and everything else. Certainly clash points within an office. And remember, taking all of them, I'm not just talking into the wind here in terms of psychology. This is really going to be taken and then transitioned, or taken and involved and implemented into that transition stage, is career goals, a work-life balance, the job changing. I won't get the stats right, but at some point they're saying that the group that are in their 20s now will likely have anywhere between 7 and 10 careers over their lifespan. Not jobs, careers. Okay? And that doesn't mean moving from the accountant senior to the accountant manager. It means out of the profession into something completely different. They want rewards. Oh, yep. Woohoo, we have a question.
I have a question before we move on to another point. The characteristics of the last demographic, the millennials.
Yes.
If we look at you say they're goal-oriented, but I think they're very short-term goal-oriented as opposed to long-term. Do you see that being a problem down the road when there are businesses that need to be sold and they are the target buyer? In terms of staying power.
The concentration span is about this big. Okay, I mean, the reality is if you can do 17 things at once while sitting on the couch, the likelihood is, boy, are you going to have to keep me entertained and keep me working at the same thing for more than 3 years. And I think that's where the one thing we don't know is what that evolution of the next business level will be.
Or the scope, the nature of businesses. That's right.
And that's where there's a concern. I mean, you've got the concern that the baby boomers who are holding all this wealth are transitioning off. You've got you got the fear that logistically and demographically there's a lot more here than there are here. Okay? And then you throw into that this and the fact that, boy, that baby boomer generation was hardworking and loyal and willing to put in 14 hours to this group where we can't answer your question yet. We don't know what that's going to bring at the end of the day. And there definitely is a massive fear that it's going to be a very skittish group going forward. Which may mean, for us it's good because we may have a lot of transactions, but. Oh, 100%. 100%. As everybody complains about the recession, I mean, the one good thing that's happened from the recession is it's kind of brought everybody back down to reality to a certain degree, financially and also psychologically a little bit, that, you can't just make 10 million, move on, make 10 million, move. I mean, you watch some of these guys flip businesses and it's not reality on a long-term basis. Huh? You'll take one? Okay. You went into the accounting profession, Eddie. Think it through. You're not going to flip an accounting firm for $10 million in 2 years. Not yet. Not yet. Yeah, okay. Anyways, again, some of the others, you get this sense of baby boomers with that climbing the ladder mentality. I start here, I do this, I do that, therefore I go there. Now I come into the workforce and I'm there. And we were also joking earlier about, when kids are in school, now little Johnny gets a star because he didn't pee in his pants this morning. Well, at one point in time, we used to get a star for actually accomplishing something. So fast forward 15 years. These kids are 5. Fast forward to 20. They walk into your office. They're expecting a pat on the butt. They're expecting everybody to give them a little gold star. They're expecting, it's all this sense of entitlement at the end of the day. Work-life balance. The builders, what balance? Working is the balance, right? That's what we lived for. That's what we will die for ultimately at the end of the day. The baby boomers, the meeting multiple family needs while finding meaning for myself. The generation kind of lost in between of making sure my family was provided for, making sure that everybody was accounted for, making sure that everybody had a better life than what I had, and in somewhere in there saying, is there something in there for me? While the next generations then come to, well, the work-life balance. I mean, I'm going to live. I want to work to live, as opposed to live to work. Okay, and again, some more varying. The first generation, that pat on the back was a sense of pride. Right? I managed to do something. I managed to accomplish it. That was good. transition that down through the generations. I'm not too sure if you walk up to one of your employees today, pat him on the back and say, job good done, he's going to go home and say, yes, I am now the boss's favorite. All right, so a few more. And any questions on the generational discussions before we move on? So you got basically 4 choices. You can either change them or they can change you. You can either accept that there is a difference between the generations. You can help each other shape. Just because the entrepreneur says, no, this is the way it's going to be, and his son wants to do it a different way, there is a way where there is a bit of give on either side of the equation. And then there's a way to take that expertise or that differences, and actually use them for a purpose. When is the right time? You know as well as I do, for most entrepreneurs, there is no right time to transition their business. It is something that, as I said earlier, they're immortal. Unless all of a sudden they've had some kind of life-changing, life-altering exercise, sickness, a death in the family. Though a death of somebody else in the family rarely ever affects the entrepreneur from his business aspect. It's usually internal. Let's say there's that individual sensing their own mortality. Other than that, they don't even want to think about it. Obviously, the transition from Generation 1 to Generation 2 and Generation 1 to an outside individual requires a lot of time, a lot of effort. There are many differences, but there are many similarities. I think one of the keys in trying to create the environment is to take at a higher level within an organization and having non-family member hold a very high position, whether that's a CFO, whether that's a VP type title. Because what you're doing is you're giving a sense of, the right word, a sense of clarity, a different viewpoint on the family business and on the family to the organization. So you'll see a lot of very successful family businesses who have had implanted somewhere in their organization at a high level somebody who didn't come from the family. Now, you can be sure that that individual certainly needs to have, what would be the right word, patience, tolerance. It can't be easy to be thrown into a family business where mom and dad and the 2 kids are constantly at each other and you're trying to make a formal plan out of this exercise. But it does, long term, for the good of the business, it makes a lot more sense. Identifying values and vision statements, family's priorities. If the goal for the family long term is a family business, it's here to provide for, it's here to support, it's here to encourage, it's here to nurture, it's here to educate, then that culture has to be taken into the long-term plan for the business, knowing that there may not be an ultimate transition at the end of the day. Because the key may be to focus purely on the family, knowing that I can't transition the family outward, but at some point in time it may have a certain lifespan. Again, the discussion of formalizing the business, creating that governance and that transparent structure that isn't about all family. I had a client a number of years ago whose his wife, his daughters, all worked in the business, and it was a 40, 50 person operation. And the daughter, reception, handled the phone, did a few odds and ends. One day I was in doing the year-end work, and she picks up the phone. Okay, one moment. Daddy, 101, Daddy! There's 50 people in this organization. Now, a little bit of environment or a little bit of professionalism. Subsequently, 7, 8 years later, that business had some major issues. Why? Because Dad was the only one in that organization that had any sense of what was going on. He then never taught it to the rest because he wanted to protect. Right? So my daughter's going to answer the phone. I want to protect her. I don't want to make her feel bad. She did a crappy job. She shouldn't have hollered my name. She's the daughter. She's my daughter. Which means 5 or 7, 8 years later, when it's time to move on, when it's time to grow, when it's time to sell, try selling that. And try walking in with a potential buyer and hearing, Daddy, line 1. Going to scare away anybody who's interested. 5 minutes? Yes. Yeah, okay, that's not going to happen. Okay, dimensions of family business governance. Again, you're talking the mix between ownership, family, and the business. A very, very difficult, and somewhere in here lies the success of a business that will ultimately be able to sell and move on outward. Not an easy task. Family harmony. Yeah, you're going to work together all week. You're going to discuss issues, you're going to fight, you're going to do, and on Sunday at 5, the whole family's coming over for supper, and we're going to smile and put on a good face and realize that that was just work. Okay, much easier said than done at the end of the day. Business growth and successful leadership. Obviously, the transition requires some strength at the end of the day in terms of where you're going, what you want to do, where the business is going to end up. Ownership issues. I mean, when you're going to transition, as part of, and I'm not even going to get into any of the taxation side of everything, but the reality is at the end of the day, there's varying ways of transitioning the business on. One of them, if I'm going to stay on, is potentially a continued buyout based on operations, redemption of shares, an estate freeze. I mean, all of these terms, I'm sure somewhere in most of you have heard before. Well, how do you structure those? What's the best way to deal with it tax-wise? What's the best way to deal with it from a control perspective? I mean, I've got clients who, I swear to you, are still controlling and they're 6 feet under. They've managed to not ever pass anything on. Yeah, sure, they sold the business to the kids. And by the way, everything was, all the shares of the voting shares are still sitting in a trust that the estate's controlling and the kids are running the business. Makes you feel really good at the end of the day. There's other scenarios where some people believe that the family's compensation, so that those working in the business receive a salary based on what they're doing. Just remember, you've got 4 kids, and 2 are in the business and 2 aren't. How do you balance things out? How do you decide at the end of the day if it makes sense for everybody to get equal? Because everybody looks at their kids and says, well, I want everything to be divided equally amongst my 4 kids. So some people will say, well, because of birthright, you get ownership. And because of your participation in the company, you'll get a salary. There is no magic formula. There's just differing ways to look at it. I'm going to skip ahead, if you will, to obviously financing the transition. When it comes time at the end of the day to actually finally sell the business. I can see a couple of the Royal Bankers nodding their head over here going, yeah, right, now we're in my territory. The reality is there's various ways to do it. Complete cash deal. There can be a financing. Okay, there can be a buyout or an earn-out based on the productivity and the organization of the company. Who's going to finance it? Could be the business, could be the bank, could be the management doing a leverage buyout. It could be a venture fund. There's a whole bunch of different ways in which you're going to see. It's, I think, if you deal with the financiers, especially the ones around the table, of course, you're going to see that there are a lot of different ways in order to handle that transition out. And I'm not even going to begin to discuss tax, because one of my partners, Nick Moratis, who does this section on taxation, we like to call him Rain Man, because he'll go off into a tax chant at some point about all the trusts and everything else that's with it, and it is a very, very complex process, but definitely needs to be taken care of. The future cash flows, remember, your entrepreneurs are living off the business. They may have been living off the business long after the fact that it was still successful. They're taking money out. They sell tomorrow morning. They no longer have the ability to pump through their expenses, to pull out cash when they need it. So when they've sold, what are they going to do? Somehow you have to supplement their income. They have to take their $5 million or $10 million, invest it from a cash flow. Brings a whole different aspect of planning into the equation. Again, future investments. The only quick thing I'll talk about is insurance. Your life insurance. I mean, at the end of the day, if there's a shareholders agreement or there's a buyout, you need to have the insurance looked at and established to make sure, A, that you have some in place to make sure that the next generations, God forbid something happens, that there is actual payout. B, so that making sure from a tax perspective that the structure is put in place, then there's a mechanism called a capital dividend account where the proceeds come into a company tax-free and can go out tax-free. But it has to be set up properly in order for it to transition out, to be used properly within an exercise.